This year, UTI Mutual Fund and CNBC TV18 have come together yet again for the Financial Advisor Forum 2016-17. The theme for the first forum, hosted in the city of Chandigarh, was Unexpected is the New Reality. Industry experts shared their insights with independent financial advisors on navigating volatile markets in light of recent geopolitical developments, evolving technologies, and underperforming asset classes.
Hello and welcome to the Financial Advisors Forum 2016-17. Brexit, the Trump victory, demonetization, change of guard at the Reserve Bank of India, state elections. If there's something that the last 12 months have taught us, it is that change is the only constant. And that is why this year's theme, Unexpected is the New Reality. How do you as financial advisors help your clients tide through the volatile period? How do you ensure that there is capital protection and there is also wealth creation? Those are some of the questions that we will discuss with our panelists today.
We have with us Suraj Kaile, Group President, Sales and Marketing, UTI Asset Management Company; Satish Krishnamurthy, Senior Vice President and Head Affluent Business, Axis Bank; Vineet Nanda, Founder and Director, SIFT Capital; and Iqbal Singh, Founder and Managing Director, Innovative Financial Management Private Limited. Unexpected is the new reality, and perhaps I couldn't have asked for a more interesting and more dynamic topic, because this is really what we are grappling with. How do you ensure your client's best interests are still kept in mind? How do you handhold your client to get through these volatile times? So Iqbal, your thoughts on the kind of questions that are now coming to you in terms of the asset class mix. And we're also coming at the back of a calendar year when the equity market, at least at the index level, didn't give any phenomenal returns. I mean, we were flat for most of it. So at such time when clients approach you, what is it that you tell them about 2017?
I just want to share with you the biggest problem. What we are doing is we are just doing a day-to-day monitoring of the fund or a scheme or a fund manager per se. But the point is that if you have to look at the bigger picture on the canvas, the portfolio return for any individual investor is not the function of which fund or scheme he has put in. It is the function of which asset class and how much is there in different asset class. Let me share with you, because I belong to this city and I am handling in this region. In the last 2 to 3 months, lot of people came out with their physical assets, whether it's a land or a building, or a property or a house or whatever, which is not yielding them a good return. Point is that, so first of all, the most important thing is that we have to make, even if it is first of all, we have to do a differentiation between a physical asset and financial assets. And in this part of the region, the financial assets are very limited, physical assets are very high. And physical assets are not productive from last 2 to 3 years. Because when we are looking at a real estate, it is a function of your dividend or rental income plus the capital appreciation. So people, maybe in the last whole decade, they have seen such a huge appreciation on the property. They have forgot about what the rental yields or yields are, 2 to 3%, but the capital appreciation was very high. But now going forward, after this demonetization, we in the North Indian has impacted much more than any other part of the India. And I personally feel that physical assets, we don't see much of an appreciation. Although barring gold, which has done very well in the last 1 year, it has outperformed than any other asset class. But we are over-owned in gold also. But historically, gold has just, beaten the inflation.
So let me actually bring in Vineet on this point as well, because Vineet, you also deal with a lot of clients in North India. You're Delhi-based yourself. Again, this point between physical assets versus financial assets. What is your reading after demonetization the last 2 months? The awareness levels and the willingness to shift to financial assets.
See, I think the process of movement of money from physical assets to financial assets actually kick-started 2-3 years back. So I don't think that the process started now. It's just that demonetization to some extent has reinforced that journey. So what is broadly happening is that people are clearly not looking at putting more money into physical assets as an investment. At the same time, people who have multiple investments in real estate are trying to look at, divesting some of that holding, because somewhere the realization is coming in that the opportunity cost of holding on to physical assets over the next few years will probably be less or the loss will be more compared to moving part of the portfolio to financial assets. So I think that journey is clearly underway. The challenge is clearly that in the current market there is illiquidity, and therefore people who even want to do that change are not able to do that change.
Yeah. So, Mr. Kale, come in on this. Given the fact that the change is already underway, where do you see much of this money flowing? Do you see most of it coming to the mutual fund fraternity? If so, between debt and equity? And ideally, where do you think it should go, as people are looking for options right now, given the new normal?
No, I think, I see it a little bit differently. So my first point is that real estate also is a market. And in any market, you'll have two kinds of players. You will have genuine users and you'll have speculators, right? So people who some come in as investors as well. So I feel what has got over is leveraging, real estate as an investment or as a speculation, which was going on. So, but the genuine demand itself is, fairly, huge in the country. So I do believe that somewhere down the line that demand will play out in real estate as well. But having said that, I think what is happening on the financial side is that, first of all, we are getting a lot more new platforms on which we can create financial products. So AIFs, for example, is an amazing platform, and especially if you want to now do funds which are investing into real estate, you can create on these different platforms that are coming through. So our view is very clear that actually from an investment standpoint, investors can make money in commodities, investors can make money in real estate, investments can make money by investing outside of the country. So there are different investment avenues, and as different avenues evolve, we need to create products in each of those categories and give the choice to the investor, so that if I can offer more choices to our investors, better it is.
That's an interesting point. So Satish, now the churn is happening. Options, we just heard manufacturers talking about bringing more choices and more products. Where does that leave the investor and the advisor, of course?
Historically, the saving avenue where most Indians would put their money is gold or real estate. And these are idling assets, right? And what companies at large, whether they are small entrepreneur, startup companies, small and medium scale enterprises, or large companies, they constantly need capital and at the right price point. And as we find more and more customers partaking in this journey, my belief is that this will lead to a substantial growth in the mutual fund assets under management, right? And my assessment is that the CAGR of the mutual fund assets is going to grow possibly at twice the rate at which it's grown over the last decade, in the decade ahead. So I think we are seeing a decisive trend towards that. And I think depending on the goal that the customer has and his life cycle, right, there are different strokes for different folks. There's clearly a point of inflection like never before in the life of both customers and for financial planners.
Let's move on to the next piece, and that's really technology and how the digital landscape is really changing the manner in which this business is being conducted. So your thoughts first, I mean, from the manufacturer's standpoint, whether it's social media, whether it's, mobile phones and the way transactions are now happening, and of course the whole digitization, demonetization push.
Sure.
How do you see that shaping up the business in the months and years to come?
In fact, the most often I'm asked this question is, how is technology going to impact us? First of all, it's important for you to just assess what does technology do, to the buying behavior of the customer. So essentially, you still need to understand the product. You still need to figure out which product you want to buy into. But what technology does is it allows you to shop from one place to the other very quickly, seamlessly, which you cannot do in an offline space. But otherwise, you still have to go through a selection process, which is fairly critical. Secondly, I do believe that you are using technology either to communicate better, either to customize,
or to standardize, in the sense that if you want a standard investment process which all your customers should experience, then technology is a great way to get standardization in your processes, or to service customers in a far better manner. So I do believe the first phase that we are seeing of technology is on the servicing side. It benefits the manufacturer a lot because now we can service really a small ticket size, which was impossible when technology was not there. So today, for example, we seriously talk about financial inclusion and using mutual funds, also as one of the products for financial inclusion, which was unthinkable 5 years back because the cost of transaction was very high for us.
Okay. Iqbal, your thoughts?
When I left Citibank and started off my own consulting firm, I was very clear in terms of if I have to reach out or if I have to scale up my business, it is not that I have to only bang on the Tri-City, I have to look at the customer. So today we are handling more clients out of US, sitting in Chandigarh. So we have done the investment on technology in terms of the platform which we have created, in terms of the reporting system which we have created. So what we have done is technology has enabled us to streamline the whole process in terms of scheme selection, in terms of client's profile, matching that and creating a portfolio for the customer, in various asset class. And at the last but not the least is basically to serve the client whichever geography they are sitting,
Okay, it's quite phenomenal. Your thoughts as well, Vineet, on the technology piece of it and how you see that changing the business?
So I think technology is important from a delivery perspective for people who want to really run a retail platform. But since we are addressing more of a IFA community here, I think technology is more important from a service delivery perspective. So, see, we are basically dealing with a select set of clients, and from a product perspective, because we are the manufacturer, there is a limited amount of differentiation that one can create. But I guess the big differentiation which can be created through technology is through how well we are able to service the clients. So I think use of technology from servicing perspective, I think will be more critical from the IFA community perspective rather than pure delivery.
So, Satish, come in on this. Is technology going to give a bit of an edge to big institutions, to big banks like yours, or will it be an equal enabler for the IFA community as well?
Customers are so empowered with information that if we stick to just the old ways of doing business, we will be out of business. About a couple of years back, if a customer had to invest in mutual funds, he would have to fill a bunch of paper, right? Today, all he needs to do is to log on to his mobile app and choose his mutual fund scheme. It pre-qualifies him basis his risk profile, and maybe within 60 seconds, he's made his choice. So I think that's the power of technology today. And imagine the sheer transaction costs, the time that's being saved through this journey. So I think technology is going to revolutionize the retail space in a massive fashion. Having said that, I think there is a form and there is substance. Finally, in the investment world, the real substance that customers expect financial planners and advisors to do is to deliver a certain percentage return on their investments. And I think that's going to be an evergreen requirement, right? And an expectation from the client group at large.
We've got some questions from the audience, so let's make this a little interactive. Mr. Manpreet Dhoni, he wants to know the impact of the new president of America on the IT sector, on the pharma sector, and particularly on the Indian mutual fund industry, if there's going to be any kind of a direct impact. So,
the presidential cycle, this is a history. The first year we seen the market which was not doing well in US, and we are now globally connected. So the point is that all the indices in US, which is S&P, Dow Jones and Nasdaq, all-time high, historical high. Dollar index is almost all-time high. And interest rates are gradually going up. So we have seen a lot of flight of money which has happened out of India. And secondly, the most important thing is there is a contraction of INR, dollar INR, interest rate differential. which is from 7% to 4%. The point is that if we are continuously depreciating, against the USD, then the question is that if I am getting 4% additional return in India, whether that will compensate with the depreciating, INR against USD. Secondly, coming back to your point, which is pharma and IT, one thing which is very clear, which I personally feel, is ultimately at the end of the day, economy prevail. I know a lot of companies in this part of the world. They are working now at $9 to $10 per hour for the US companies. And those companies, if they are getting their work done in US, they are paying $120 to one person for 1 hour. So this is the kind of arbitrage which most of the companies are enjoying. But ultimately the economy prevail.
Varun Pal wants to know which sectors perhaps could benefit because of demonetization, if at all.
More and more money is going to come into the financial sector, right, for investments, and I think largely banks will see a huge benefit, right, and customers will, and as a domino effect, corporates will see a lot of benefit because all that cash will be lent to corporates eventually.
Again,
right?
My submission to all of you would be that the job of selecting the sector and the stock is of the fund manager. So the fact that all of you are basically doing advisory, your role is not really to figure out the sector and the fund. So again, focus on basically risk appetite, asset allocation. Let the stock selection, let those worries be handled by the fund manager whom you're paying a fee to do it. So if you treat yourself as experts in your domain area, there's an expert who's a fund manager who's handling that. So let them manage that and you focus on your area of expertise.
Well, the last question for this evening, and this one's for both you, sir, as well as for Satish. How will the surplus money that is lying with banks right now, how is that going to affect the markets? It's coming in from Mr. M.L. Batra.
Look at it this way, right? The core role of a banker is to accept deposits, right, on the one hand, and then make sure that capital is deployed most productively, right? I think this entire period, thanks to demonetization, has led to a massive inflow into banks, right? And banks will search for right avenues to deploy this capital to give it the most productive returns. So I think, like I said, I think this will lead to interest rates coming down because there is so much liquidity in the system, and as interest rate comes down, there will be a demand revival, hopefully in the corporate sector, and that should set off an entire virtuous cycle, right, of consumption, of more and more investments happening, right. A lot of people who are hedging their bets and sitting on the fences, they will want to invest. Okay. So all that is going to happen.
All right. Well, on that note, we're going to wind up this evening's discussion. It's been a very engaging conversation. I thank all the panelists and thank the audience as well for your participation.
We take it as a responsibility to share new ideas, fresh ideas. How do you deal with market uncertainties? How do you deal with the current challenges that all of us are facing? So the whole idea of doing this panel is to really showcase, to the larger distribution community the benefits of, sharing information. And obviously we believe that distributors need to be respected and rewarded in terms of, what they are contributing to the society. There aren't enough forums, in our industry which do that. So this forum exactly does that. It's made for the distributor and recognize the contributions that they are doing to our industry.
For a country of our size, with over 125 crore Indians, right, almost 130 crore Indians, the total number of IFAs that we have pan-country is negligible. We have, I think, less than 50,000 IFAs, and if we were to put together all the banks, and the people that work in banks interacting with customers, it's still a very, very small number. So I think forums like these should inspire more people to join the financial world, right, and become experts in the financial profession so that we can handhold clients, right, and help them make the journey of creating wealth. So I think this is a terrific initiative.
I think it's a great opportunity for advisors to come together and share their experience in the industry. And I think the topic was very seminal because we've had recent events which have caused volatility in the market, and in fact 2016 that way itself has been a very volatile year, and it's important for us to be able to share thoughts and ideas how to be able to manage the volatility and continue with our target of being able to deliver good experience for our clients and good returns, and ensure that we are able to create a win-win situation.
This initiative which has been taken by UTI, CNBC and ICRA is a great initiative, and this is the first time which is happening in the city, beautiful Chandigarh, and which has given a lot of thought-provoking idea for IFA or investor community, what they should do and how they should do, and it will definitely guide them in terms of right direction, in terms of doing asset allocation, profiling, and creating the best of the portfolio for the customers.
Focus, ideate, innovate, enable.